Good day, traders. This is Roger Scott from Market Geeks with another video tutorial for you today. Before I begin, I'd like to remind you to subscribe to our video channel for swing trading videos and trading tips. And don't forget to visit marketgeeks.com for your free swing trading report. Last week, I was asked by numerous traders during a seminar what indicator I preferred to use the most. The answer was the exponential moving average, or the EMA for short. I demonstrated yesterday how I use the EMA to measure pullbacks away from the main trend. The method was rather simple, but works remarkably well for finding stocks and other markets that are trending and, more importantly, measuring a pullback away from the main trend. In a nutshell, we found a stock that was trending strongly above the 20-day EMA and waited for the stock to trade completely below the 20-day EMA. We waited a few days for the stock to come back completely above the moving average, and I don't recommend you wait more than 5 days for this event to occur. In other words, once the stock drops completely below the 20-day EMA, you should wait no more than 5 trading days for the stock to rally above the 20-day EMA. Today, I'm going to show you the correct way to enter the strategy and where to place your stop loss order. I highly suggest you pick stocks, futures, or forex markets that are going through volatile periods. Most swing trading methods require strong volatility, and this method is no exception. You can see in the example below how Facebook stock began trading well above the 20-day EMA before moving completely below the average. The stock stayed below the EMA for less than 2 trading sessions. Remember, you never want a stock or other market to trade below the average for more than 5 trading days. Once the market trades back above the EMA, we want to find a strategic entry point so we don't get stopped out randomly due to market noise. I prefer to place my entry order immediately above the first bar that trades completely back above the EMA. I place a buy stop order 25 cents above the high that was achieved the first day the stock trades completely above the EMA. Although I'm using stocks in this example, the method applies to commodities, futures, and currencies just as well. You want to make sure to monitor the market and make sure you cancel your entry order if the trade doesn't fill the first day after you place your entry stop order. You want to see strong momentum coming back into the market after the crossover above the EMA occurred. If the market doesn't move straight up, the odds are the setup is weak and you may want to look at other stocks or markets. I want to place my stop loss order at a strategic level so that I don't get stopped out prematurely due to volatility and market noise. Make sure you place your stop loss order at the moving average price level immediately below the first bar, completely below the EMA, and the first bar immediately above the EMA. This may sound a bit confusing, so I will provide an example for you to see exactly where the stop loss level should go. Just in case the previous example was a bit confusing, I'm going to confuse you even more by showing you the entire sequence from the short side. I'm just kidding about the confusing part. I really think it's a good idea to see how the stock sets up visually from the long side as well as the short side. Notice in this particular example, the stock only stayed above the moving average for 3 trading days. Remember, the stop loss placement goes at the moving average level between the first bar outside of the moving average and the first bar inside the moving average. You can see both bars identified in this graph. Now that you know how to identify the setup and the first bar inside and outside of the moving average, you should place your stop loss at the moving average level of the area immediately between the 2 bars. You can get a good idea from this graph exactly where the stop loss level is placed. This is a buy stop, not a sell stop, because we're selling short. Tomorrow, I will conclude this 3-part series on building a complete strategy using the 20-day EMA. We're going to go over profit targets, and I will show you the best way to calculate your profit target level for this strategy. Thanks for joining us for today's video tutorial. Don't forget to subscribe to our video channel and visit Market Geeks for your free swing trading report today. This is Roger Scott wishing you the best in your trading.